All right, what's up, guys? Let's see. Let's give it a minute or two with this. All right. All right, good morning, guys. Today is Friday, August 11th. So today I just want to focus on the SAR strategy and any questions you guys may be having. So yesterday I spent, and you'll see I have this new chart that has US 30, gold, EU, and the US dollar on the daily time frame, and I have just the SARs. So yesterday I backtested all these four instruments on the daily time frame to understand, right, how do these levels we're seeing here, right? Because we know the green lines are, so regardless if it's the daily, 4 hour down to the 1 minute, the green SAR lines show a buying area. The red SAR zones show a selling area. Now, on the daily time frame, so let's just focus on the daily time frame. Let's forget about the trend lines that I draw on the hourly. So I normally say, and I'll put the strategy up here for the parabolic SAR strategy, which is right here. So, excuse me, so suitable for scalping and early entries on the lower time frames. But requirement number 2 is to always have a bias from a higher time frame, so 1 hour and above. So for this particular instance, let's focus on the daily time frame and how we can use the parabolic SAR to get entries on the daily. So let's just start with US 30, and this is similar to everything like US 30, gold, EU, and the US dollar. So let me just put one chart right here for the US, excuse me, for US 30. And I'll just replay the candles, right? The daily candles from a random area. So I don't know, let me start right there. So this is 16th May 2022. So the idea here that I want you guys to consider on the daily is, okay, let me put this, let me go back where in the requirements, I think, give me 1 second. So for you to find the daily bias, you need to look at the previous SAR level, right? So in this instance, if we're considering US 30 and we want a daily bias, we want to consider the previous SAR level, whether it's a buy area, excuse me, whether it's a buy area or a sell area that was closed. So if it's a sell area, we need a daily to close below the red line. If it's a buy area, we need a daily candle to close above the green zone. So let's say, for instance, like right here, my bias for US 30 would still be a sell until we get a daily closure above a green SAR. So hopefully we're together until there. But currently, like as of 17th May 2022, my bias for US 30 would still have been a sell because the last SAR to be closed below or above was a red sell zone. So my daily bias until we got that closure above a green zone, my daily bias, and this is the same for gold and every other instrument. So here, my daily bias for US 30 would still be a sell. Now, how would I enter sells on US 30 here, given, and you can see we started an uptrend, right? So this is the instance where you then go to the 4-hour time frame, 4-hour time frame or 1-hour time frame. So what you're looking for is double SARs or triple SAR lines. So in this instance, you guys can see this triple SAR that happened yesterday. So yesterday, US 30 was unable to break this zone right here because we had 1, 2, 3 sell regions for US 30. So for here, what you would want to see is either, so there were a couple of entries. It's either a break and closure below. Also, so this candle, actually here it was more of a test and rejection. So my entry here when I woke up, because I don't trade mid-Asia, I'm sorry, I don't trade late New York to mid-Asia. I saw when I woke up this morning, I saw these 3 candles rejecting off of these 3 SARs. My bias on the daily for US 30 was a sell. So I went ahead and entered that sell. And during news, that trade pushed all the way to TP. And actually for this trade, I had like a 50 pip stop loss. And I took, so for these trades, you want to have like a 1:2. And then when you're at 1:1, you go ahead and set break even. So that's the idea. If the daily bias is bearish, go on the 4-hour, go on the 1-hour, and look for zones that have triple or double SARs that are in the same direction. So if your bias on the daily time frame is a buy, you need to find areas in the 4-hour and the 1-hour that have double buys or triple buys or even 4 buys or whatnot. You can still trade single lines, but just know that those have lesser probabilities. So if anybody has any questions regarding that, go ahead and ask, but if not, I'll just continue. Okay, so let's go back to continuing to backtest this. So the daily keeps going. So you see how it comes back down? It comes back down because the trend is still, the bias is still bearish. So as much as US 30 had started trending up, you can see that US 30 came back all the way down. So let's keep going until we get a green candle. Okay, there's one thing I want to show you guys right here. So if you get, so in this instance, let's see if it goes, there's the green candle right there. So the daily candle on 25th May is the one that created this green candle. So keep in mind, when you get this, you can start thinking of switching your bias. But for you to switch your bias from this confirmed sell, definitely right here, you need a daily candle to close above this buy zone right here. So if you don't have a daily candle closing, so for me, even during this day, my bias would still have been a sell. Now, there's one thing I want you guys to notice here. Keep in mind, SAR stands for stop and reversal. Now, even if my bias was still a sell here, right? Because my bias would still be a sell. When this green candle was formed, it's also an opportunity to enter another sell. Because more than likely, this candle, this daily candle so a daily candle that forms SAR level, more times than not, it won't close above or below it. It will take like the next day or another day before. So when this candle is formed here, this was an opportunity to sell US 30 there. It was a risky sell because definitely it can pump through, but more times than not, when these zones are formed, keep in mind SAR means stop and reversal. So when these zones are formed, it can be a quick sell. Now, let's go on and see if we do get a green or a daily candle closing above this buy SAR region on the daily. Okay, so the next daily candle, it looks like it's closing up, right? And there you go. So at this point, would I now consider my bias for US 30 as bullish? Right? Until we get the same thing that happened here. So at this point, my bias changes to, so here, bias changes to bullish. And here, right? So hopefully we're together up until there. Now, here, So guess what I would be doing? I would go on the 4-hour time frame on US 30, same thing if it was for gold or EU or anything. And I would look for double. I would go to the 4-hour and 1-hour, and I would look for double or even triple SAR zones. And even if possible, if I don't have those double or triple, I would look for a single one and wait for that break and retest. And now let's keep back, right? Let's keep, well, technically it's back testing. So our bias here on the daily time frame, I would be buying US 30 until I get the next sell SAR, like in this region right here. So let's keep going. Okay, so you'll see here, we got that sell candle right here. So up until this whole point, my bias would still be bullish on US 30. However, when we got this daily candle closing below the new SAR region that has been formed, my bias, so for this candle right here, my bias would change to bearish. So keep in mind, these are daily candles. So definitely, there could have been moves like buy and sell moves within here, but keep in mind, this is just a daily candle. And a daily candle has 24 1-hour candles and so on and so forth. So as much as you see them as big moves, keep in mind that, right, one daily candle has 24 1-hour candles. So my bias right here for US 30, when this daily closed here, my bias would have been for sells. And I would have just been looking for sales this whole time until, so this is what I'm talking about right here. When I mentioned to you guys that this zones, even though my bias is still a sell here, if this green zone happened, it's also like stop, right? SAR, stop and reversal. You can use it to continue catching sells until you get that candle closure above this zone. But keep in mind this zone. So if you're in a downtrend, if your bias is bearish and you get this green SAR line, it's just telling you, hey, be careful. I may, you might need to change your bias in the next day or two to a buy. But keep in mind, you can also use this zone to catch a quick sell or to continue your sells. But you need to be careful because, right, I'm at that point where I can change anytime for my bias to be bullish. So let's see what happens. So you can, right, it keeps selling and then creates a red SAR region right here. But you see no daily candle closed below here, close below the SAR. So you're using the last candle, the last daily candle that closed either above or below an SAR. So in this instance, US 30 formed a bullish SAR, it didn't close on the daily above it. US 30 formed a bearish SAR, it didn't close below it on the daily. So the last successful closure on the daily is still a sell. So at this point, I would still be selling US 30 until I get that reversal. So there you go. So you see here, US 30 forms a green SAR, so a buy SAR on the daily. Guess what happens? It closes above. So at this point, I'm done selling US 30 on all lower time frames. And then at this point, I am just looking for buys on US 30. So hopefully that makes sense. So as much as so this whole time I would be buying US 30, and then guess what happens here on 22nd of August? US 30 is telling me, okay, I formed a sell SAR for you on the daily. This is a zone you can keep buying because SAR, I stand for stop and reversal. So this can be a region for you to scalp a quick buy to the upside, but just keep in mind that on the daily time frame, within either today that I've formed this sell zone for you, or tomorrow, the next few days, I can close below this zone. And if I close below this zone, don't look for buys because you're going to get burnt. So let's see what happened. There you go. So at this point, when US 30 closed below here, I'm done looking for buys. I start looking for sells for US 30, and you can see. So hopefully that makes sense. So this is the same logic and same here for the buy, right? So of course, right, nothing has 100% win rate, but if you backtest this, so I did this for the last 5 years, and you can see, so long as you follow that logic, and then you use the 4-hour and 1-hour timeframes to look for those double and single and triple SAR regions. Just follow the bias. So just let this, because I know a lot of, or some people, even myself included, like yesterday when the trend lines were telling us the instruments are buying, but this daily was telling us that all instruments were selling, and you see the markets just melted yesterday. So same thing here, right? This happens. I've been selling US 30 this whole time since this daily SAR showed up. And then, right, this green SAR shows up, and I'm guessing that candle closes above it. So at this point, I'm just looking for buys on US 30. There you go. I get another, so it forms a sell, but the daily candle did not close below the sell area. So for me, I'm still looking for buys on US 30. Right, so you just use that analogy to find your bias, and then you've got the first step right. So if you have other confluences, right, so long as you have that daily bias, and the best thing about this, using the daily bias, as much as price can move against you sometimes, if you go to the 4-hour and the 1 hour, so for example, right here, if I go to the 4-hour, like right now, I sold US 30 here. Let me know if you guys have any questions regarding this backtest I've done. But right, it's just looking for the last SAR
Yeah,
that.
I have a question, Michael. I just want to know if that thing is repenting or just
No, it doesn't repaint.
thank you.
Yeah. So I'll put this back. So there were 4 right here. Okay. So same thing with, so we've seen US 30. So US 30 right here. What is the last successful area that US 30 closed below or above? It was a sell zone. Yes, it did create a buy zone yesterday, but keep in mind what I told you guys. You can sell at this zone. The only way my bias right now for US 30 can change is if we get a candle closure above 35,560 on the daily time frame. But until then, I'm only looking for sales. So that is why this morning I went on the hourly time frame. I saw that triple SAR region. Even yesterday, we had this double. We had this triple right here. We had a double right here. We had another double right here. If we go on the 4-hour, let's see if we had anything yesterday on the 4-hour time frame. So your entries, ideally, the logic here is find a bias on the daily, and then go to the 4-hour, and then go to the 1-hour and find an entry off of there. So you can see yesterday on the 4-hour, there really wasn't any doubles or singles. The only double that was there was for a buy, but you can see how the buys were short-lived. So that's the one, that's US 30. So same thing with gold right here. So for me, I'm still bearish on gold until we get a closure above a green SAR. And you can see gold currently has not formed a green SAR buy zone on the daily. So for me, I've actually just been selling gold. I haven't been looking for any buys on gold. And you can see also right here, since gold and EU are tied to the DXY, so the dollar index. So that's why I have the dollar index as one of the instruments that I'm watching right here. So if you look at the dollar index right here, what can you see? My bias for the dollar, if you ask me, right, based off of just a simple way of looking at bias, my bias for the dollar is bullish. Why is that? Because the last daily candle to close um, above or below an SAR area on the daily was a buy. So the last time the dollar closed above the buy SAR on, what is it, on Monday, 24th July. Until then, yes, gold has retraced a little bit and actually created a sell SAR zone. But keep in mind, for me to have changed my bias for the dollar to a sell, I would need a candle, a daily candle, to close below this SAR zone. But until then, right, I would just have been looking for buys on the dollar. What does that mean? That means like gold, EU, and all of that, anything correlated to the dollar would be dropping. So hopefully that makes sense how you can use this bias. So right now, what is the dollar index telling us? The dollar index is telling us a story right here. It's telling us on Friday, 11th August, I'm creating a buy zone right here for you. So this is to tell us if I close above this SAR buy zone that I've created for you, continue looking for buys on the dollar, which is to mean, right, gold should keep going down, EU should keep going down. And you can see, like, especially for gold literally has not created a buy SAR on the daily. So you can see right, we can backtest the dollar as well. Right here, it created a buy zone, daily candle closed above it. Guess what happened? The dollar kept pumping up. What happened here? On Friday, 7th July, when the daily candle closed below the sell SAR, the dollar melted to the downside until it got that buy entry. What happened here when the dollar closed above this buy SAR? Pumped up. Same thing here when it closed below this sell, pumped down. And the best thing with this SARs, they're created in real time. So it's not like indicators that show up way back, which is quite Audrey's question about repainting. These candles, these SAR regions are created in real time. So you can see this buy SAR right here on the daily time frame on the dollar was created today by this daily candle. So like, for example, right here, if I backtest for you, if I replay this chart, as of yesterday, we didn't have that SAR for the buy. And then we keep going forward. It created that sell because there was that heavy news yesterday, but the dollar recovered. And then there you go. It's creating that live SAR region. So that's why it's important for you to focus on the live SAR region. Don't focus on previous ones. The only times I ask you guys to focus on the previous ones, and keep in mind, all of these SARs are on all of the indicators that I have given you guys access to. So I normally give you guys access to all of my indicators. So for all the indicators at the very bottom, you'll see that parabolic SAR zone. So for me, in this instance, since this indicator right here also has other uses, I've turned off every other input for this indicator and just left the SAR level to show. So, right, I could have even used our reversal indicator. I could have used our crosses indicator and just turned everything else off. Now, you can see here the difference between like this chart right here. So it's the same indicator. Well, you can use any, but it's the same indicator. But if you go right here, the charts that I have, and you can see these extended lines, you can see it's ideally the same indicator I'm using, but the only difference is right here, the extended lines. So the reason I'm extending lines on the 4 hour and on the 1 hour is because I want to capture those triple SARs, those double SARs. So in the daily, for me to find bias, I'm not interested in capturing triple zones. I'm not interested in capturing double zones because I just want to focus on the current candle on the current SAR that was closed above. So here, like if I wanted to, I mean, you can do it. You guys can do it if you want, but you can see here, I also don't want my charts to be cluttered. So if I extend to 500 and 500 is the trading view limit, it just means it considers it extends to 500 candles in the future. But here, if you do 5, it extends to the 5 candles in future. So if an SAR candle, if a candle forms an SAR region and you leave, the default is 5, and you leave it at 5, the SAR line will be valid for 5 candles. So right here, sure, I can extend it to 500, but look at how messy my charts are. And it starts confusing me because even on the daily, right, what am I going to focus on? Am I going to focus on this red? Am I going to focus on this green? So, right, for me on the daily, I just choose to not extend that and just to leave this at 5. And then I just have a much cleaner chart. And then I'm only looking at one thing and not like lines from 500 candles ago. Now on the daily and the 4 hour, yes, I would say extend the lines to 500 is the limit. So you can do anywhere between 5 and 500. Because on the daily and 4 hour, you're looking at those double entries. So let's look at what's happening on EU right here. EU, you can see EU is selling, right? Why is EU selling? What is the last, where's the EU chart on the daily? The bias on EU on the daily is a sell. And this was a nice area to continue selling because remember SAR, stop and reversal. But for me, if you're taking this, I would only advise it for scalpers because keep in mind, as much as it's a stop and reversal, this candle could have easily blown past this buy zone. So for example, let's look at a candle that could have burnt you for you trying to catch it. So let me do gold because gold is, so gold here would have worked. I'm looking for a candle on the daily that formed the SAR and closed above. So this candle right here, you see gold on Wednesday 17th. So ideally, what you want to see, the candle that forms the SAR, let me plot this in a clearer zone. The candle that forms the SAR, you'd expect if it's forming a sell right here and the previous trend was a buy, you'd expect a sharp retracement and possibly, right, this is what you would expect most of the times. But you can see in this day right here, if you tried to continue your buys on gold right here, this candle would have smashed past that SAR it formed and closed below. Now, my idea here, right? More times than not, you won't get the candle that forms an SAR, whether it's a buy, whether it's a sell, especially if it's on the daily time frame. Because remember, if you go lower to lower time frames, right, there's more volatility and you'll get more candles closing above or below. But on the daily time frame, more times than not, the candle that forms an SAR will reject against that SAR it has formed before the next daily or 2 days later is when the candle is when that candle will close either above or below. So for example, let me use this as an example right here. You see this, let's backtest this to show you a practical example. If we go, let's use this sell SAR right here that wasn't validated. So where's that replay tool? And I want you guys to observe the candle that creates that SAR sell. This candle right here. So it created this SAR sell. So keep in mind the SAR, that region is created when price is around that region. So here, if your bias was a buy. So here for somebody who caught this buy, right? Because keep in mind stop and reversal. And this is, I only advise this for scalpers. I don't advise it for swing traders like me or intraday. You could have caught this buy on gold, but you can see you'd have needed a, such a wide TP to avoid this manipulation. But you can see even on the next daily candles, price kept rejecting from that point. So that's only for people who like scalping, right? Stop and reversal. It's a quick 10 or 20 pips you can catch from those reversals. But anyway, right? I just want you guys to, so you can see the same thing that's happening on the dollar index. Like a few moments ago, where was the dollar index? The dollar index was exactly at that SAR. So here, you could have sold the dollar, meaning you could have, I'm guessing, bought gold. I'm guessing gold probably went up. Yeah, went up real quick. So that's why I'm saying, right, it's mostly for scalpers. Personally, I don't want to deal with that because again, every time I scalp, I end up over leveraging and it just makes me feel terrible. But I just want you guys to understand how to use the daily bias. Stick to that first if you're not a scalper. If you're a scalper, use the daily bias and use this live reversal, live SARs to catch a quick reversal for continuation to whatever direction you're trading. But right, so for me, daily bias, I'll still continue doing the trend lines. Like today when I took the sell on US30, right here, if I turn on my, what is it called? Right here, if I turn on my trend lines and I only draw trend lines on the hourly, you can see when I sold US30 was here. So US30 had already broken below this static trend line right here, and retested and had started trending down. So the days I love are the days when my hourly trend lines are matching with the daily bias. Yesterday, my hourly trend lines were telling us to buy. The daily bias was telling us to sell. The previous day, when we caught those huge sells on everything, the trend lines were telling us to sell, and the daily was also telling us to sell. So I would say start with the bias by itself, because I know most of you probably don't have time to draw the trend lines every day. So start with the daily bias and then look for those entries on the 4 hour, on the 1 hour. The other thing, you can use the same logic on the 15-minute time frame. So that's why on my left right here, I have the 15-minute time frame. So it's the same logic. If you're looking for sells on the daily time frame and you don't want to trade the 4 hour or the 1 hour, you can look for entries on the 15-minute, even the 5-minute and the 1 minute. But just keep in mind that if you enter on the 15-minute, your stop loss would need to be wider compared to when you're entering on the 1 hour. So for example, right here, this sell on the 1 hour would have given me a better risk to reward, because you can see on the hourly time frame, all of these candles rejecting from this triple SARs. So this one, you could have had like a 30 pip stop or 20 pip or whatnot. But just make sure, just keep in mind that the lower the time frame you go, the higher the chance of getting faked out. So which is why most of these days I just stick to entering trades or finding entries on the 4 hour. Any questions? So, and I think that's simple enough. And right before, I know, right, we have the breakout strategy, we have the reversal, we have the crosses. First, understand this by itself, and then, right, start tying down our other strategies to it. So for example, and I haven't really started actively doing it, but the zones indicator which we have shows us where sellers are sitting and shows us where buyers are sitting. So in this instance, like today, if I was selling US 30 here, and I wanted to maybe get another confirmation. Again, don't do this until you understand the SAR by itself. If you try to understand the SAR plus the zones plus the order blocks, you're just going to get confused. So understand the SAR to a point that you can visibly see or indirectly see the direction of the SAR and the bias before you start tying it to the zones. But for example, since for me, I understand the zones, I understand the order blocks. When I was selling here today, I would have wanted to, if I turned on the zones indicator, to see sellers in the market around these SAR zones that I'm selling from. And you can see this morning, we have a bunch of sellers on US 30 right there. So hopefully that makes sense. On gold, unfortunately, today we didn't have any double. So not to say you can't trade a single SAR, you can, but for me, I would rather trade double SARs. So on gold, we didn't, we had a double SAR right here. Where was that entry for the double SAR? So currently this would be there's a current trade active on gold for a double SAR right here. I'm not gonna take it. I don't take trades on Friday. But this, and when trading the SAR, how do you know how to position your TP and stop loss? Your stop loss should ideally be above the SAR. So if I turn on that strategy right here, your stop loss should be below or above the parabolic lines, depending on the direction. So if you're selling, you want your stop loss to be ideally above the SAR sell zone. If you're buying, you want your stop loss to be below it. The best the best stop loss is the previous high low. So for example, right here, yes, and this is on the 4-hour time frame. This is a valid sell on gold, but for you to have sold here, you would need your stop loss to be above those two SARs that you're trading or above the previous high low. So you can see here, if you put it above the SARs, you could have just gotten faked out and gold would have melted back to the downside. If you put it above the previous high of the previous candle, you can see you would have survived that move and gold is pushing back down. But again, so Friday, what we know about Friday is they normally manipulate markets on Friday before actually continuing the move. So I don't trade on Fridays. Yes, I took this sell on US 30 because it was like 2 hours before news. So the probabilities of that trade hitting were higher, in my opinion, as opposed to taking a trade after New York session has started and it's a Friday. So I technically have only 4 hours to trade or 5 hours during like today before the market closes. So they're more than likely going to manipulate price here, but that is a valid sell entry on gold. But again, I'm not going to take that. But that's how, like, for example, right here, right? The daily time frame on gold, the daily bias is telling us, hey, we are still selling until we get that closure above a green SAR. I come down to the 4-hour. The 4-hour shows me this, shows me a double SAR. So I just look for rejection and or test and rejection from there, and I go ahead and enter that. And another thing that I like to look for. So let's picture this. So I can see a couple of entries right here on gold. Let me delete this. So this also was an entry on gold because it was a break. So this candle broke because I want to show you guys nothing has 100% win rate. I'm not telling you this strategy has 100% win rate. So I just like, showing you guys that you can lose. Even I lose. Like yesterday, I lost before I won at the end of the day. But anyway, right here, there's two ways to enter a sell or even to enter a buy. You can either have a break and retest or test and rejection. So this right here, this sell to my left that I took on US 30 was a test and rejection, because if the sell entry shows above price, the only way you can sell is if a candle tests that region, or using my strategy for entry is if the candle tests that region to the upside, and then the next candle retests and rejects to the downside, and then you enter on the next candle. So that's the test and rejection. It would be the same thing for a buy, but in this case, the buy would have to be below price. The other way to enter is break and retest, which means the sell area would have to be below price, and then you have the first candle breaking price and closing below, and the next candle either retesting, but keep in mind, not all entry candles will give you a retest. So you can, I guess I'll stop using the term retest. So you can, I'll call it break and continuation. So in this instance, this 4-hour candle broke and closed below our double SAR right here. Right now, for us to get confirmation that this trade is still valid, because this 4-hour candle, the next 4-hour candle could have easily gone back and closed above that zone, and then at that point our trade could have been invalid. So you need to wait for the next candle. So what did the next candle do? Yes, it opened below the zone. It didn't give us a retest, but closed below. So this, for anybody who enters on impulse, this was an entry on gold. This could have been that entry on gold earlier on, and you could have had your stop loss above the SAR region that you're entering from, or again, to be safe, above the previous high of the candle, since this is a sell zone. Now, if you did above the SAR, got and faked out, and price would have kept bouncing around. If you put it above the previous high, in this instance, because it was a sell, you could have survived that fake out, but you'd still be in drawdown right now. But one thing, right, I sent a video the other day regarding, by this guy, Kimmel Trading on YouTube. So he talked about the power of three. It's like an ICT concept. So he talked about the Judas swing, and I went over it yesterday. So you guys know how I like trading these double and triple SARs. I like having such a tight stop loss, right? And on average, I want to have at least a 30 pip stop loss, whether it's on gold, whether it's on US 30, whether it's on a Forex pair. Now, for me to have that, if I was being is it objective or subjective? If I was being objective right here, for me to have a 30 pip stop, this wouldn't have satisfied these requirements right here. It wouldn't have satisfied set stop loss below or above the parabolic line. So clearly here, if I was trading this sell on gold, yes, it was a valid entry because we had a 4-hour, and this is on the 4-hour. Because we had an 4-hour or a candle close below my targeted sell region, and the next candle closed below it as well. Yes, this was a valid entry, but there's no way for the probability of me getting stopped out on this trade was high by using a 30 pip stop. Now, when the power of three concept, right? Think of it as if you expect a candle to be bearish, right? And he explained this on the daily time frame. So, right, if you guys, damn, let me open that real quick. If you guys go to the general chat, so hopefully it opens with that. I just want to show you guys that video right here. All right, I posted that video in the general chat. So this is the video I'm talking about, right? So if you're expecting a candle to be bearish, keep in mind, if everything is telling you this daily candle is going to be bearish, expect manipulation. If you're right, if more than likely you're right, expect manipulation. So if you're expecting, so he talks about if he expects a candle to be bearish, he expects a Judas swing to happen. Now, a Judas swing in ICT trading is manipulation. So which means if he expects a candle to be bearish, the candle is going to start, more than likely the candle is going to start bullish. Now, if the candle starts bullish, he wants to start looking for entries between the open of the candle and the high of the candle. Like as soon as that candle that he's trading starts creating a wick, he's trying to enter trades there. Now, in the same instance, if for me here, I saw that entering this trade with a 30 pip stop would make me break my rule of the stop loss at the very least being above the SAR region, and I was expecting gold to drop with the same 30 pip stop, you know what I would have done? I would have waited to see if price retraces to my area right here. So hopefully we're together up until then. So since the entry was so far, like here, technically I would be chasing the sell already because the sell would be so far, or the price action would be so far away from my SAR. So here, my the distance between my entry, so my entry would have been here, and this is a valid trade. My entry would have been here, but the SAR zone is 50 pips away. So if I'm still sure, or with a right, with a lot of probabilities that gold is supposed to drop, guess what I would do? I would wait for that retracement to this zone to create a Judas swing. And I can tell this is probably, if we go on the daily time frame, this might be a Judas swing on gold right here. So you can see by Judas swing, I mean, so right here, this is the daily time frame. So if we expect this daily candle to be bearish, currently what's going on right now is a Judas swing. That's if I'm right. So keep in mind, it doesn't have to, I could be wrong, and this daily candle could close as bearish. But if I'm expecting, which I am, I'm expecting this daily candle to be bearish. What's happening right now is manipulation or a Judas swing, meaning that it's starting off as a bullish candle. And if I'm looking for sells between the open of that candle and this wick that it's creating, I should start to enter my sells there. Now, using the same analogy, I go back to the 4-hour right here. You know what I could have done? Even though for me personally, I enter trades on impulse. I don't have the patience of waiting for these retracements, but which is actually why sometimes I lose, even though I shouldn't be. So here, what I could have done, I could have waited for gold to get to the 4-hour. I'm sorry, on the 4-hour, the same entry, instead of taking the sell right here, I could have waited for gold to retrace to my, this was double or triple, to my double SAR sell regions right here. And then I could have entered my sell right there. So I could have gone to the lower time frame. So I'm pretty sure around 1918 area on gold, if we go to the 15-minute or even the 5-minute time frame, 1918, I could have gotten an entry on gold. So the 15-minute sort of lines up with the 4-hour right here. If I go on the 5-minute, we're looking for a break and retest of an SAR zone right here around 1918. So the only one that's close by here is this sell right here. Short position right there. If I was doing the same thing, 30 pips, if I wanted to do the same thing, 30 pips, right, there's that. So the trade came down 1915 to 1912. So 1915. So again, right, since you're using a 1:2, when you've already accomplished a 1:1, so at this candle right here, the trade was already at a 1:1. So in this instance, I could have gone to break even. And this trade I could have exited at break even. So you can do 5-minute, you can do 3-minute, you can do 1-minute, right? But the idea is, if the trade is so far away from you and your stop loss cannot satisfy you getting above or below your SAR, wait for price to retrace to the SARs that you're trading, and then look for an entry on the 5-minute, on the 1-minute. That will, it will give you that nice tight risk to reward trading that I like, especially with this strategy. And then that's how you can do it. But again, always be cautious trading on Fridays. I don't trade on Fridays. My Friday trades, I take them on Thursday, mid New York. So let me know if that made sense to you guys. But I think at the very least, even though you're not looking for entries on the 4-hour, on the 1-hour, this daily sentiment or bias right here, I think it will be a nice area for you guys to help with your trading. So you don't have to do, right, if you're finding it difficult to draw trend lines, just use this one, right? You don't have to draw anything for this one. You just have to put it on your chart and then just follow the direction it's telling you. So if anyone has any questions, now is the time to go ahead and ask. All right, so everything is everything but the US dollar. So these three instruments, US 30, gold, EU, all of them based on the daily bias using the SAR, all of them are bearish. Now for me to change my bias, how do I change my bias for US 30 to be a buy? I need a daily candle to close above this green SAR right here. Until then, my bias is, so I'm not saying US 30 is going to go here, but I need US 30. I would need US 30 to close above that area on the daily. For me to change my bias for gold to a buy, I would need gold to form a bullish, so a green SAR, and I would need a daily candle to close above it. And after then, all I would be trading is buys on gold. Same thing right here for EU. For me to change my bias for to a buy on EU, I would need a candle to close above there. Same thing for the US, the dollar index. I'm still bullish. For me to be bearish on the dollar index, I would need the dollar to close below this red SAR that it's already created. Another rule of thumb that you can use sometimes to avoid getting, because sometimes you might be chasing the end of a sell momentum. So right now, and keep in mind, this is the daily, right? The sell momentum on gold, maybe right now is when gold is about to reverse and then starts going up. So keep in mind, for the reversal, so this before you get confirmation of the reversal, the move could have already started. So for example, right here for the dollar index, right? For the dollar index, this whole time until we got this closure above, I would have still been bearish on the dollar index. But you can see this whole move up to the dollar index started down here. So a nice rule of thumb is to wait and catch the first closure. So what I mean by that is, for gold right here, what I could have done, one strategy you can use is to wait for, so let me use this replay. Okay, so let's take when gold was here. And let's just actually, let me go back a little bit further in order to give more context. Okay, so one strategy you can have is that you're going for every move. So for every bullish move, for every bearish move, so for every bullish or bearish move, you aim to make 2% of that. Okay, so if that's the case, then you can start. So don't start like right now, the last area, the bias for me, if I was trading on Friday, May 12th, my bias would have still been bullish because the last area gold closed above on the daily was bullish, right? But in this instance, it's not like right. I'm trying to trade after the move, after the bullish move already happened. So in this instance, I wait for the next closure. So if I'm waiting for the next closure, so let's see what the next closure will be. The next closure will be bearish. Let's see if that candle actually closes. Yes. So at this point, I tell myself, since I'm catching the beginning of this daily bias, so I'm not catching it like 3 days later, I'm catching it when it got confirmed. So as soon as this daily candle closed below this sell zone, and this is the same logic for US 30, gold, EU, Bitcoin, whatever you're thinking. If I wait for confirmation on the next SAR region, I don't care if it's a buy, I don't care if it's a sell, but I wait for confirmation. So when the daily candle closed on Tuesday, May 16th, below the SAR sell area, I would then tell myself, and I aim to make 2% in gold sales. That's it. So I aim to make 2%. Whether that happens before the next, so keep in mind, if this is a sell SAR, the opposite would be a buy SAR. So whether that happens when between now and when the next buy SAR shows up, or whether that happens in one day, all I'm going to be doing is entering sells on gold. And you aim to make 2%. So let's assume you make 2%. So let's see what happens. In the next 2-3 days, gold is selling. So the next day gold is selling, the next day gold is selling. So keep in mind, as much as we got this retracement right here on this daily candle, so remember your entries are supposed to be on the 4-hour and 1-hour, where you're looking for double or triple SAR cells. So don't be alarmed by this candle going back up. Right, I don't think I can go back this far on the 4-hour, but on the 4-hour there could have been possibly 2 SAR sell entries right here. So right, when I'm talking about that, think of what happened with US 30 yesterday. US 30 pumped up here. Look where it went to reverse. So I was still bearish on US 30, but look at where it reversed at 3 SAR sell areas. So this is the logic I want you guys to tie in. So as much as you can see gold pushed up here on the daily, so keep in mind US 30 did the same thing yesterday, but here we go on the 4-hour, like if we see the daily, where is that? Right here, the daily candle here on US 30 pushed up. But if we go to the hourly, It tells us a story. Look at where US 30 rejected from a triple SAR zone and sold all the way back down. So don't worry about your bias, right, being wrong or right. Just focus on your bias, and then you're not looking for entries on the daily. The daily is only giving you the bias to look for, or the entries to look for in the 4 hour or on the 1 hour. So gold sells the next couple of days, right? Look at that. So you could have made your 2%, maybe let's say you made your 2% the next 2 days. Guess what you do? You say, I'm done taking sells on gold. Now I'm only looking to take buys on gold. But for me to take buys on gold, I will wait for gold to close above a buy SAR, and then I'll look to make my 2%. So as much as gold keeps dropping, now here's the part, right? Gold keeps dropping. So there's somebody who could have made their 2% the first 3 days. There's somebody who's gonna take two opposing SARs to make their 2%. So let's say if you're a more aggressive trader, you could have made your 2% on day 1 or day 2 or day 3. If you're a more conservative trader like I am, I would have taken it easy and maybe aim to make 1% per trade, 1% per, like assume like all of my trades for these entries, I'm risking 0.5%, but because I'm doing a 1:2, if I win a trade, I'm actually making 1% per trade and only risking 0.5%. So if you think of it with that logic, you can even risk 0.25 per trade and then do a 1:2. And then if you win that trade, you're making 0.5%. You trade maybe 4 trades there, you make your 2%. But let's see when the next green candle showed up, or green SAR. So keep in mind, gold is still selling right here. So in this instance, now, if I had made my 2% on day 1 or day 2, or maybe it's taken me 16th May, it's taken me a month, right? Now that's not going to be helpful passing a challenge, but let's say it's just a small account, personal account. Now I've already made my 2% right here, and I'm waiting for the next green SAR. So here, what I would be wanting is for a daily candle to close above this. Now you can see we didn't get that. And actually, gold kept dropping, made a sell SAR, and let's see what I don't, so it closed below. So at this point, I can keep selling because I got another confirmation. So it's not the buy confirmation that I was looking for. So keep in mind, you're just trading the first confirmation you get. Whether you get 2 sell confirmations in a row, you keep doing your thing. So here you keep taking your sells, and gold keeps selling this whole time. It gives you that green SAR right here. Now, this is a tricky one because technically this candle wasn't involved in the first 5 candles. So that's a decision for you to make, whether now you're going to transition to buys. If you do decide to transition to buys, there you go. Start aiming for your 2% right there. And gold keeps pumping up. Now here, until it gets to the next one. So since we've seen here, 2% might be on the lower end, because we just saw that the next time even the opposite SAR showed up on the daily time frame, 17th May to 12th June. This was about a whole, is this a month? What is it? Give me a second. 17th May. No, it's about 2. Is it a month? They don't look like 30 candles. Yeah, I guess it's 30 candles. Well, it's like 20 days or something. So 2%, and knowing that the next SAR might show up after 1 month or 3 weeks, maybe that's not convenient to pass a challenge. So I would say then aim to make your 8%, but do your risk properly, right? So wait for the first candle to show up, like right here, when gold closed below here, below the SAR. So we can say, let's aim to make that 8% after the next SAR has shown up. So let's not be chasing, like right now, gold. I wouldn't advocate for chasing the sell on gold right now because gold has been dropping so heavily. But let's assume here on this day, which candle created that sell SAR? Let's see. It was this candle. So we are waiting for a candle to close below that red SAR. So perfect. So that candle closes below that red SAR. So let's say, since we've gotten that sell bias and we are catching the beginning of that sell trend, during this time, let's aim to pass phase 1 in this instance. So let's risk 0.5% per trade, and then do a 1:2. And then with that, you just need 8 winning trades to pass phase one. Keep in mind, if you use a 1:2, if you lose one trade, you only need the next trade to achieve the 1:1 for you to be break even. If the next trade achieves 1:2, you've gotten back the loss you've made and you're actually up 0.5%. So that's the good thing with like, I love using a 1:2 for this trades, but I normally set break even at a 1:1. So in this instance right here, right, you can see how gold just kept selling. So, and gold right now is still selling, but at this instance, I wouldn't advise anybody to start right there sell if you're starting a challenge to maybe test this out, or if you're starting a demo. Let's assume a demo. Don't start selling gold here because the sell has been happening since 1947. So this maybe is the reversal, is the start of the reversal. So let's wait for the next daily SAR on gold, same thing as US 30, same thing as on EU. Let's wait for the next daily closure above SAR region that has already been formed or is about to be formed. And at that point, let's start taking those trades in that direction. Because right now, I really wouldn't advise anybody to keep. I mean, personally, I'm still looking for sales, yes, but you can see gold has been selling since ever since we got the sell at confirmation at 1945. It did this fake out right here to the top, and then now gold has just been dropping all the way there. So if you're looking to test this on a demo or challenge, let's just wait for whether it's US 30, gold, EU, Bitcoin. Let's wait for the next current SAR to be formed, and let's wait for a daily candle closure above that region. And then at that point, let's start aiming, looking for trades in that direction. Risking 0.5% with a 1:2. We only need 8 winning trades. If you lose, right, so long as this, and you can see we just back tested randomly EU gold, I'm sorry, US 30 gold and the dollar index with the last, I don't know how many SAR entries, and you can see the accuracy. So keep in mind, no strategy is 100% gonna give you 100% win rate, but you just need to win, especially with the 1:2. You just need to win more times than you lose, and you'll ideally come up on top. But other than that, let me see. Oh, no, do start of a reversal. So anybody have any question? I think this is easy enough to follow. So this right, I found this to be because right, keep in mind this SAR strategy is what, it's like a week old. When I first started testing it, I was using it to scalp, and I made money, but at what cost, right? I was panicking in trades. I wasn't feeling comfortable because I was every time, honestly, right? And this is honest to God, every time I scalp, or almost every time I scalp, I end up over leveraging. And yes, I make money, but I just want to feel comfortable. And for me, I look at trading. I have like a 10-year vision for trading. So if I'm to last 10 years in this game, and based off of every other successful trader that I follow, even this guy, right? Like this Kimo guy, I like his videos a lot. He just goes for small risks. He does like 0.5, 0.25 risk per trade, and he's been a full-time trader since 2020. And right, some of these traders that I'm following, they've just started being profitable, like after 4 years, after 3 years. So this is for me my third year in trading. So right, I kind of see myself in them. And right, every trader is different. For me, that's just what works for me. But I've showed you guys how if you're a swing trader or intraday trader like me, you can use this strategy. If you are a scalper, you can use this strategy also with a nice win rate. So it just depends. Find out what kind of trader you are. And also, right, this is not the gospel, though. This is just something I think yesterday I spent 12 hours backtesting this. I only did it on the daily. You can say your daily bias is going to be based on the 4-hour time frame. If you find that works for you, go ahead and use that. For me, I just find the daily just gives me better confluence. But I'm not telling you can use the 1-hour time frame to give you the daily bias. You can use the 30-minute. But just know the lower the time frame you go, the more price will disrespect your bias while using this indicator right here. Okay, I think I'm done talking. So if anyone has any questions, feel free to ask. If not, we'll call it a day, and I will see you guys next week. All right, perfect. As always, right, if you have any questions after the live session, feel free to post them in the group. And that should be it. I don't think I have anything else. All right. And for me right now, I'm just focusing on the SAR. So even for me, it's still new to me, but I spend hours and hours backtesting this thing. So I have all these other strategies, right? You can see the crosses indicator, still profitable, right? Sales, these sales have just been hitting by US 30, right? But always remember, even with the parabolic strategy, the kryptonite, the downfall to any of my strategies is a consolidating market, is sometimes news. So you want to avoid trading consolidating markets, which is why in every indicator that I give you guys access to, I've also added a time filter in that indicator. So if you don't want to trade, like I advise guys not to trade 3 p.m. Eastern Standard Time to 11 p.m. Eastern Standard Time. If you do not want signals in any indicator, go ahead and turn on in your indicator between a certain time, go ahead and turn on the time filter, put in your time filter, the times you want the signals to show up, and then just let the indicator do the rest. Now, I am trying to get SAR indicator, but it's, working with my programmers, it has just been a heavy challenge. But I don't think we're gonna get that. I have something similar. I mean, I can show you guys. This is what we've been working on, but I do not. I like this buy and sell zone. So technically this should be the indicators. They're not accurate the way I enter trades, but I think this is the as far as accurate we will get with this entries. I mean, you can see this sales would have been nice, but you can see, right, it's now waiting for that break and read. I'm sorry, this is GJ. Let me go to an asset I trade. So US 30, for example, and I trade this on, this would be on the 15-minute, right? It's not really waiting for that double candle closure above a SR zone. So it's mostly taking the first candle closure. So I don't know if I'm going to proceed with this, but because it's ideally not. And for me, when I develop indicators, I develop them so that I can automate my trading. I do, right? I want to get to a part where so all of my indicators, you can automate them for, you can take Telegram to MT4 trades. You can take TradingView to MT4 trades. So for me, my vision while creating any indicator is such that I can automate for the signals to be taken automatically, which I've done for pretty much all of my indicators. But this one, I don't think I'll release it because the entries are, it's not following the logic as should be. And there's actually a reason for that, because the SAR logic is hard to code for you to add a confluence to it, if that makes sense. But I'll keep trying with my programmers to see if we can get it to work. But for now, I mean, this would have been a nice buy entry. But anyway, for now, let's just use it to enter trades manually. And then if I ever do get it to work, I will, of course, give you guys access to it. But other than that, I will talk to you guys next week. Have a good weekend.